There's little doubt that 2012 will be a year of economic crisis around the world. Hi, I'm Michael Yardney, and what's certain in these times of uncertainty is that some property investors are going to grow their wealth by taking advantage of the opportunities that the market's presenting them. While many Australians are going to sit on the sidelines waiting for somebody to ring the bell, heralding the bottom of the market, smart investors, savvy investors, are going to be out looking for and buying opportunities that are created by the current buyer's market. So in this session, I'd like to look at 9 time-tested rules that these successful investors are going to use to make their fortunes. I'm going to explain them in much more detail at my round of seminars around Australia, my national property market and economic updates. They're currently occurring, so why don't you click on the link at the bottom of this article and you're going to be able to find out all about them. Okay, let's go back to the rules that smart investors are using. The first rule is that they invest, they don't speculate. Look, even though many people think they're investing, lots of property investors are actually speculating. They buy a property emotionally, often near where they want to live, near where they want to holiday, near where they want to retire. Then they hope the market will appreciate. It's a buy and hope strategy, not a buy and hold strategy. This makes them dependent on outside conditions to produce a profit. On the other hand, smart investors do it differently. They make educated investment decisions based on research. Then they buy a property below its intrinsic value in an area that's always outperformed the long-term capital growth averages, and then they add value through renovations. Thereby, they manufacture extra capital growth, and that's a great strategy at this time when general average capital growth is pretty low, isn't it? Okay, the next rule that property investors stick to is they know it's all about property. Wise investors never forget this age-old fundamental. They buy the best properties they can afford in proven locations, and they don't allow themselves to get sidetracked by glamorous finance or tax strategies, all these newfangled ideas that keep coming up. The third rule is that they understand that property is a high growth, low yield investment. While the argument about capital growth and cash flow keeps raging on, it'll go on forever, savvy investors know that the fastest way to build an asset base, the fastest way to build a substantial property portfolio is through capital growth. The fourth rule they understand is that land appreciates. But they understand what this rule really means, because they know while it's true that land appreciates in value, they also know that it's not really that simple. Not all land is made equal, and not all land appreciates at the same rate. Look, there's lots of land, lots of supply in some of those outer suburbs of most of our capital cities. But much of the demand in those outer suburbs comes from a small segment of the market, first-time buyers. So you've got lots of supply, restricted demand. And this keeps a lid on capital growth and makes these areas poor investment prospects. Even worse, the land component, the bit that appreciates, usually only makes up half or maybe even less of the total value of the property. However, in the inner suburbs, the proportion of land to the total value of the property is usually considerably higher. Remember, it's the scarcity of the land that causes property values in these inner suburban locations to keep rising. And currently there's a strong demand from a wide variety of owner-occupiers for properties in our inner suburbs. I think this trend is likely to continue as more of us choose to live close to the workplaces, or we want to be in locations that have often got better access to infrastructure, things like public transport, shops, entertainment and facilities. As demand looks set to outstrip supply in the middle and inner ring suburbs for many years to come, I think these areas are going to be where successful investors are going to be buying, and that's where they're going to get their long-term capital growth. The next rule successful investors understand is they buy properties that are going to be in continuous strong demand. Of course, not every property in any given suburb is going to make a good investment or have similar capital growth. Savvy investors understand that investment-grade properties are the type of property that's going to have a wide appeal to owner-occupiers. They understand that investment-grade properties appeal to owner-occupiers because, in fact, owner-occupiers make up the majority of buyers, don't they? That's why savvy investors avoid studios, student accommodation, holiday accommodation, service department, those specialty properties. After all, it's owner-occupiers, not tenants, and not investor demand that pushes up the value in the long term. Now, at my National Property and Economic Updates one-day trainings this month, I'm going to explain exactly what type of property I'm buying and in fact what properties I've sold over the last year. So please join us and find out what's happening in the markets and what you should be doing about it. Just click on the link below and reserve your place. The next rule savvy investors understand is that it's actually demographics that hold the key to long-term changes of how we live, where we live, and that's going to determine the type of property that will be in demand in the future. As our cities mature, there'll be lots more one and two people households, meaning secure medium density apartments and townhouses. They're going to be a preferred style of accommodation for lots of Australians. We're going to be swapping our backyards for balconies. The next lesson that all smart property investors know, the rule they follow, is that they've got a great team of people around them. If you're the smartest person in your team, you're in trouble. Successful investors surround them with a top team of consultants, and they now know how to discern an advisor, somebody who's independent, from a salesperson. The eighth rule I'd like to share with you is that smart investors understand where the risk really lies. See, most investors believe there's a direct relationship between risk and reward, that the higher the reward, there must be more risk. You know, that's not really true. While most investors think the risk lies somewhere in the property or the markets, things outside their control, the biggest investment risk actually lies with the investor, with their knowledge, their experience and their mindset. The best defense is a good offense. Wise investors educate themselves and develop a level of financial fluency. It makes the investment journey safe. Safe as houses, some would say. Interestingly, most successful investors don't diversify. They specialise. They become good at one thing. They become an expert in an area or a niche. They get good by doing the same thing over and over again. The last rule I'd like to share with you today is you've got to understand that the property market moves in cycles. You know, during a boom, everyone's optimistic and they expect good times to last forever. And when we've got downturns, we tend to lose our confidence, don't we? The truth is, our property market behaves cyclically. And each boom sets us up for the next downturn, just as each downturn sets us up for the next boom. Just as it is right now. Now that's something interesting to think about, isn't it? Now I'm going to explain to you exactly what I'm doing about it personally when I'm joined by finance strategist Rolf Schaefer and tax specialist Ken Race as we conduct our national property and economic updates. We're doing those in 5 states around Australia in the coming weeks. So if you own a property or are thinking of getting involved in property, if you've got any interest in property, please click on the link below and join me at these one-day trainings. Of course, I'm going to keep you up to date with how to take advantage of the changes in these regular updates at Property Update, but it's probably a good time to remind you that in changing times like we're experiencing, no one can help you quite like the independent investment strategists at Metropole. Remember, the multi-award winning team at Metropole have got no properties for sale, so our advice is independent and unbiased. If you want to find out a bit more about what's happening in your local market, and what our research suggests is in store for us, why not join us at a free briefing in Melbourne, Sydney and Brisbane, or with our associates in Perth. Just click on the link below this article to find out all about these. Look forward to bringing you the next update in a couple of weeks' time.